The euro is at 1.15 and the pound is at 1.33. Everybody says they are weak, but what does the data actually say? So this morning I pulled my dashboard and what I saw is different from what you think. So before you run along with that whole part and take it like it's everything the video has to say, I want to address something that you did not pay attention to. The data is saying that they are strong. However, recently something different is happening. So let's dive into the real data and see exactly what it actually means. Without further ado, I'd like to tell you welcome to the channel. The name is Chukwu Nicholas and I trade Forex and work a 9-to-5 job. Do well to hit the subscribe button, like the video if you understand, and share to someone who will find this knowledge valuable. So without stressing your eyes and mind, this is a graphical representation of the current state of the economic data releases. You can clearly see the overall data on the left and there are 14 days on the right. Now 14 days means in the last 2 weeks, what are all the data releases compiled saying? Basically, we are seeing that the Australian dollar, CAD, Swiss franc and slightly the US dollar are losing strength. Basically, they didn't gain as much in the last 14 days. Hence, we would like to see the overall data keep going lower over time. However, we have the euro, British pound, Japanese, the New Zealand dollar gaining strength. As a trader, you don't just pick up one information and run with it. Why? Because by the time you look at this information, you may think you've found gold. You should be buying the pound, you should be buying the euro, but let's look even further. Now, when you put that as a comparison against each other, against the pairs, in overall comparison, the only pairs you should be buying is the euro against the British pound. But if you look into the recent 14 days, you may find yourself having lots and lots more pair to even deal with. Funny enough, you have things like the euro against the Swiss franc, the British pound against the Australian dollar, the British pound against the Swiss franc, and even the New Zealand dollar against the Swiss franc outpacing the euro against the Australian dollar in the recent 14 days. But again, you are not going to take just one particular information and run into the market. So even though this information is saying go long here or go short here, we still need to drill down even further. Why are they having this kind of readings? Well, let's dive in even further to the individual pairs in. Now looking at specifically the Australian dollar for a start, you can see the information here. The light blue is the overall data and then the deep blue is the last 14 days. And you can see in the last 14 days, we've had absolutely no information regarding the central bank, but we had employment data come out extremely terrible. Now, some news are far more important than others, and something like employment tells a bigger story because it is by far the most leading indicator you ever find about an economy. If the employment status of an economy is down, every other thing is likely going to start falling down with it. Same thing with economic activities. If the economic activity is also down, likely every other thing is going to start going down with it. Why is this so? Well, the economy runs on people having money to spend in the first place. If people are not employed, it means they can't have money. If they don't have money, they can't carry out economic activities such as going out for birthdays, hosting parties, having get-togethers or whatever it is, buying food or anything at all. If there is no job, there is no money. If there is no money, there is no activity. So basically, that's the way it works. But mind you, it's a two-edged sword, right? It's a two-edged sword. As sharp as it is against the enemy, it is also sharp against the user. Why? Because if there is high employment, like very high employment, it means that a lot of people are having money. If so many people are having money, everybody is ready to spend. If everybody is ready to spend, that is going to lead to inflation. So it's a double-edged sword. You need to be very careful. Back into the video. So we have Australian dollar, and what we see here is an economy in the recent times having very little good data to give us. We have the credit scores being empty, as you can see right here. This is the credit score, literally zero. We have the speculative positioning. Now, I do not really care about speculative positioning much. I care about full-time positioning of most traders, mostly the retail traders, and I have a way of tracking that instead. However, it doesn't mean I don't take this into account. This is all for the Australian dollar. A lot of negative news. In fact, if you notice, the only good news here is their balance, which is at 60%, which is not even like real good. It's just leaving the good bar. So basically, everything about the Australian dollar is not good. We move on to the Canadian dollar, where we have about 3 good news or 4 good news in total. We have the employment data being good news, as you can see right here. The employment data, the employment data is bad news. We have the inflation data being good news, meaning every news relating to inflation in the last 14 days was good. I'm talking majorly about the last 14 days in case you're forgetting about that, right? So focusing on the last 14 days is what I'm talking about. The last 14 days, we have the employment data, we have the inflation data being good, the consumer confidence or confidence index is good. Bad balance sheet, nothing about credit when it comes to the card. But the economic activity for the Canadian dollar or the Canadian economy is better than before, as well as the speculative positioning. But how come it has like enough, about 4 good out of 6-7 data here, and yet it is still reading as negative? Well, it is simple. Like I said, some things have weight more than the others, as you can see here. Clearly, it should strike your mind that if employment is bad, a lot of other things are also not, taken as good. We have the Swiss franc with only the inflation data and the speculative positioning being good. We have the euro. We have the euro. Now, the thing about the euro is you need to understand this. In the recent days, the employment data in general is good. Inflation data is good. The consumer confidence, or rather confidence index, is good. Then the economic activity is good. Apart from that, we have bad credits and bad speculative positioning. Those are the 2 absolutely bad news for the euro. The British pound, on the other hand, it has not real good economic data, employment, not good economic activity, good inflation data, good balance sheet, good bond, bad speculative stance, bad credits, and bad consumer confidence index. However, the central bank data, which is by far one of the biggest indicator of everything that has to do with the economy, is really, really, really good. Now let's take a look at the Japanese yen. The Japanese yen has good data, very good central bank stance, good employment, good economic activity alongside. We have the inflation data just at average, and you can see overall a lot of the things here are really good. Moving on to the New Zealand dollar, we have this stance where we have just the inflation data and the balance being quite good. For the US dollar, on the other hand, now this is the guy that has every goddamn news that exists on the surface of the earth, right? Every damn news, except the central bank. The central bank data altogether in the last 14 days has not been good, but the employment data is good. The economic activity is is good, not really bad, it's good, above 50%. The inflation data is above 50%. I'm going to zoom that in for you to see it. So it's 60% up. The consumer confidence index is roughly 30%. Let's zoom that in, around 25%. The balance sheet is 50. The credits, what's the credit? Let's look into the credit. It's 56%. Speculative stance is on its own 81%, and then we have the bond, which is 55%. So putting all of this together, let's see what they all look like. This is the stance, all of them side by side. And one thing you can clearly see here is one of the best developers here is the fact that the British pound's central bank data is clearly standing out. You can see it there. It's clearly standing out in the recent 14 days. I'm talking about the recent 14 days specifically for all currencies. You can see that standing out real good. And then under the employment data, we have 14 days for everything looking good. We have the best sets of data coming from the euro as well as the US dollar compared to every other pair. For the economic activity, the recent 14 days, we have the best of CAD and the Japanese yen, slightly the US dollar. You can see in these 3 places there seems to be some sort of winning. Now let's head into the main deep dive of why is it that the pound seems to have good data but somehow is tanking on the chart. Well, this is where we're going to do a deep dive. We'll dive into the deep view to see this whole situation. Now we're going to pull back the curtain for the last 2 weeks. So I'm going to select the weekly. I'm going to make this 2 weeks. Right, we're going to make this 2 weeks, and this is all the data for the last 2 weeks. So let's head into, first and foremost, the British pound. The British pound in the recent 14 days. This is the data of the British pound in the recent 14 days. And what you can see here is, you notice that the red, right? When it's red, it means it's a bearish news. The outcome of that news was bearish. You notice that in the recent day, which is, this was on 12/13, that is when we started seeing real terrible information when it comes to the British pound. As you can see, overall the data is better for it, but when you look at this particular time frame of 2 weeks, you see clearly that it's the most recent sets of news in the last 2 weeks that has a big problem, especially for the British pound. The most recent sets of data, you can see the economic activity suddenly started sliding down very, very much. We have manufacturing production. They had terrible scores there, though I can't get the numbers on here on Power BI simply because they are like very, very, very minute numbers. They're supposed to be percentages. There are percentages and some are just normal numbers, and not all of them shows up. I have to choose either number or percentages, and if I select percentages, some of them may be blown out of proportion. If I select number, some of them may be nullified, which is in this case economic data, activity data is nullified. However, the GDP, the year-on-year GDP, the index of service, a lot of the things released recently are just abysmal, and all of this interprets what you're seeing on the chart. Let's head into the euro, and you can see we have very similar situations, right? Very similar situations. In the last 2 weeks, it's been producing really, really good information just up until the 5th of March, and then everything started to go spiral downwards. Basically, everything started to just tilt downwards. You can see the GDP coming out negative, the speculative stance coming out negative, the industrial production coming out negative for the euro. So this is going to explain to you, this is like a deep explanation to you why it's one thing for you to know that overall the market seems like it's good. It's another thing for you to know what is really happening in like the most recent time on average, like what is really, really happening most recently. As you can see here, most recently it is not so good. Personally, I would love to add like another new filter to my strategy, whereby I have 7 days, in the last 7 days, what has been happening, and another one maybe in the last 24 hours, what has been happening. But it takes a lot to make this chart, as you can see right here. It's a lot to get all the way to this point. Let's look at the US dollar on the other hand. Now, the US has lots and lots of news for the last 2 weeks. As you can see, a lot of news, sometimes many bearish news on the 6th, like a lot of bearish news on the 6th, but they somehow keep coming out of it, going back in, coming out of it, going back in, coming out of it, going back in. But all in all, they seem to be keeping some good, should I call it a fair leverage, fair stance, if I should say, quite good stance, in my opinion. We have the New Zealand dollar. You can see recent news for many of them seems to be, they're finding it difficult to keep up in the recent times, right? Finding it difficult to keep up in recent times, especially with the Strait of Hormuz having serious hits thanks to Iran, and finding it difficult to ship oil around the world. Hence, we expect economic activities to slow down and inflations to go up. Moving into the Swiss franc, you can see similar situations here. Where we start to see like good information is the CAD. The CAD seems like it's holding up well to a good extent against a lot of things. However, it still has like a lot of red signals, like bad signals, saying that okay, this particular information is not as interesting as we wanted it to be. Moving on to the Australian dollar, we have very similar situation here. So one thing you notice is almost all the currency in the recent 4 days since 12, they've been having very abysmal releases, and it's making it difficult for them to process or make headway. So in the next video, I'm hoping I'll be able to work on the dashboard, make a little bit of 7 days view and those 7 days averages, so you can get to see, oh, okay, on the 7 days this is what is happening. But all of that is all fine, it's all good. I hope you learned something here looking at the fundamental stance of the market, understanding that it goes way beyond just looking at the chart. The chart is an imprint of what is happening here. If the news is good, obviously the big buyers are going to be buying. Nobody wants to be buying into a market that they can clearly see it's going down. Nobody, trust me, nobody, no matter how big the investor is, no matter how much money the investor has, they always want to go for the running thing, the good market. For example, AI is been huge and everybody's been going into it, and currently we're beginning to have information that says AI is not so good. And then what are we seeing? We're seeing some investors bail out, seeing some investors also coming. So what is all of this? What am I trying to say with all of this? Well, it's very simple. Before you place a buy or sell, you need to understand the fundamentals, the informations behind that asset. And when you understand the information behind the assets, then you have a clearer picture if it is worth buying or selling. I had a clear picture of selling the market when I started seeing those capitulating news, but I stopped out of the market earlier because personally I can't hold that trade. Personally, it's not a bad trade. Actually, the trade worked out perfectly fine, but I couldn't just hold it. So this is a lesson for you guys today. Hope you learned something. See you guys in the next video, probably tomorrow, where we'll be dealing with layering this alongside with technical analysis. Without further ado, I'd like to tell you thank you. Do all to hit the subscribe button, like, and support the channel. Peace.